Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his friend Jonathan Twomley. How you doing, sir?
I'm doing well, Michael. How are you?
I'm doing great. Something I had to follow up with you on because you were at a multifamily event in Texas last week was something that Jamie Dimon said. The reason I want to do this is you've been in New York for a long, long time, and Jamie Dimon is someone we both look up to and respect. So, you ready?
Absolutely. Hit me. I just
So,
told surprise. I don't know what he said.
oh,
So
cool. That's awesome. So I'll give you the full story. So about 2 weeks ago, Jamie Dimon was in front of a financial audience, basically saying, hey, when I look out in the future, I see storm clouds, right? Makes sense, right? A recession, high interest rate, the Fed's not your friend, the Fed puts dead, kind of makes sense. 4 days later, he's in front of a different group and he actually said, I need to change my analogy. I have now come to realize that those are not storm clouds. It's the front end of a hurricane. The financial hurricane is coming. The economic hurricane is coming, and it will hit us. Now, we don't know if it's a little category 1 or Superstorm Sandy or Andrew or any of the nasty ones. But to hear Jamie Dimon go from storm clouds, which was like, we know how to deal with storm clouds, to a hurricane, and we don't know how bad it was going to be. That caught my attention, both for the stock market, for the economy, for consumers, for rentals. I mean, this is Jamie Dimon, right? I don't know. I call him the best banker on the planet. And it's because he doesn't care and he says what he thinks. So how does that hit you? Any questions? What do you think?
What did he mean? What is he basing this on? What was it's a great quote, but
Basically, the economy is going to go. He's calling for a recession. Right earlier in the year, he talked about a recession being 33%. It's now over 50%. He doesn't think that he sees a hard landing. He sees the consumer retreating. He sees earnings coming down in the S&P, multiple collapse. I mean, he's just like, and then he closes with, well, he's basically saying, this is what I believe is coming. And oh, by the way, this is what JP Morgan is doing. We again kept our balance sheet loose. Again, I think it was a year ago, he said we had 900 billion in cash. And he's like, we're going to treat that and leverage our balance sheet very conservatively, right? He's basically saying this is going to take some time to get through.
Well, yeah, he's loading up on cash. I mean, look, we've talked a lot about people loading up on cash for a while, right? Smart people were loading up on cash back in 2019 before, all hell broke loose with, people buying stuff. But hurricane, I mean, it's pretty strong words. I could definitely see there being some issues on the horizon, though, right? As interest rates are going up, and it's making it hard for people to afford stuff, and inflation is taking a big bite out of people, right? Yeah. So I think that there are definitely some rough waters ahead. But this is just inevitable. I mean, this is like what happens when you have, how many years into this? Almost 15 years.
Yeah, 14, 15 years. Yeah.
Yeah, like it's just, and the longer these things go on, the worse it gets, right? Because people forget that a crash could happen, and you get people who literally, like, as an adult, have never been through bad economic times, and they think that this is going to last forever, right?
Yeah, you could be in your late 30s, and the last crash you were in college and probably weren't paying attention, right? That's pretty amazing.
Yeah, listen, like a recession every 5 or 6 years is actually good for everybody, right? Because it just reminds them, like, that it's not all unicorns and rainbows all the time. Yeah, exactly. So I had an interesting discussion the other day with some of my multifamily guys who, a lot of them pay a lot of attention to the economy, as they should. One of the very interesting things that came up in that discussion, and this might kind of help to soften the blow a little bit, what Jamie Dimon was talking about. We're talking about the fact that Americans are pretty flush with cash right now, after all of this, all the money that they got during the recession, all the money they didn't spend during COVID, right? Because they couldn't really go anywhere and do anything. They bought a lot of stuff on Amazon, but they weren't buying big ticket items necessarily because of supply chain issues. They couldn't get them, right? So Americans have a lot of cash right now, and this is one of the things that's driving rents. People feel like they can spend a lot more money on rent because they have a lot of cash in the bank.
Yeah.
So how does that play out, right? Is that going to cushion the blow? What, because people still have cash in the bank
Yeah.
to keep on spending, even if the economy softens? Um, or is it, is it not? Will people start hoarding their cash and not spending if there's a recession? I really don't know kind of how it's going to play out. But
Yeah,
that's
I want to poke at that a little bit because I that is an area that I have been questioning openly on my daily financial news probably for 6 months because the math never really made sense to me, right? $1.2 trillion in excess cash and in money markets and savings. It always felt like a skewed number to me, like the rich were pulling that up or the well-to-do, right? They were going to cash and sitting on cash. Just in the last 2 weeks, so very new news that you may not have seen. American savings rates are back to the 2008 low, 4.6%, down from 13. And credit card debt, credit card debt has exploded in the last 30 days. We don't know why yet, right? Is this just millennials at Gen Z YOLOing the summer and going to Europe and Asia for travel because we've been cooped up for 2 years, or what's going on? To me, I think the economy is K-shaped as it usually is. It's just more pronounced today. So what do I mean by that? I think 30% roughly of the American, population or households, I guess, make 100 grand a year and have, generally speaking, the ability to have some discretionary income, which is being tested today with inflation. But what that really means is 70% of us don't have it. And now with 8% inflation and arguably 15 to 18% for things that are important, i.e. food and energy and rent, it's crushing people. So I don't buy this. Yes, I'll tell you, I would guess that maybe 15%, maybe 10% of us have more cash than we've ever had because we're waiting for the rainy day, right? We've been here before. We know how this movie ends. But I think there's 70% of us who are struggling heading into this. They couldn't scrape together $400 for an emergency. Now inflation's at 8% for a year and likely continuing. I don't know how this plays out. I mean, we're already trading down on, food. We're already, eating out less. We're driving less. Consumers are making painful decisions today. And I say this as a kid who remembers his mom and dad making these same decisions in 79, 80, and 81. These are not pleasant memories. It feels yucky. So what do you think? Do you really think Americans are flush, or you just think, the top 10% are flush?
That's a really good question, because rents are continuing to climb a lot, and the cash is coming from somewhere. Right?
Yeah, we're going to talk about rents in the video 3 because I have a
surprise
for you.
This has literally been something I've been scratching my head about over the last couple of months. Like, where is all the money suddenly coming from for people to pay all these rent increases, right? And you're talking about 20% rent increases a year. I hear people talking about, their rent went up 30%.
Yep.
Their people's rent payments are going up $500 a month, and this is on B-ish property, right? So it's not like high-end, luxury property. People don't even notice it, but like for a B property, they feel it, but they're paying it. Mm-hmm. Where's the money coming from, right? So
I don't know.
That it's coming from somewhere. So but that being said, if rents are going up that fast and inflation is going up that fast, then that money's not going to be around for a long time.
Yeah, right? and that's my fear, because a lot of us, again, a lot of Americans, frankly, a lot of citizens around the world skate really close to the edge every month, right? Discretionary income is a luxury of very few. And if you happen to be in that camp and you get a big rent bump, and then I filled up my gas tank the other day, it was over $100. I mean, It's crazy, right? So, and then food, where food is going with, the breadbasket of the world being kind of shut off. It's just, I think a lot of people are going to have to make increasingly hard choices. And I no longer believe that stat. I mean, I understand that somebody's looking at some total cash number. I would highly suspect that the top 10% skew that number drastically. Yeah. So we're going to talk about rent in video 3, because I think that's a topic that's important to both of us. I have a surprise for you that, again, is an early call that I've never made before. I've been waiting to have this discussion with you. But before we talk about that, where can people follow you?
So if you would like to join my free Facebook group, it is the Multifamily Investment Community. All you need to do is search for it on Facebook. If you would like to join my investor list, you can go to just Google Two Bridges Asset Management LLC, and you will find my page. You'll find my investor form. Just fill it out. It takes about 2 minutes, and you'll get on my investor list. I only deal with accredited investors though, so you should know that. Yep. And finally, if you would like to learn how to do this kind of stuff all on your own, or with help from me, you can go to multifamilylaunchpad.org/join, and you can learn all about the programs I have.
Awesome. You need to follow Jonathan. He's very conservative. He's been waiting for what is coming. See video 1. I'm following him. He's a mentor of mine. He's helping me understand how I could think bigger, do bigger deals. Possibly. I'm looking at maybe 40 or 60 units, probably next year, year after. He's going to help me with that. So Jonathan, thank you very much.
Absolutely. You're welcome.